I'm Robin Amlôt of IBS Intelligence. You're listening to the IBS iViews podcast. With me, Tamer Al Mauge, Managing Director MENA for Codebase Technologies, and Pankul Verma, Principal Cedar Management Consulting International. Our topic for today, neobanking in the MENA region. Let me start with you, Tamer. Why do you think so many traditional banks have launched neobank subsidiaries? What's the business case for doing that?
Basically, when we look at why maybe few standalone, let's start with that on the neobanks in this part of the world or this region. There has been consistency in the growth of neobanks in recent years, especially, from incumbents introducing digital arms. And let me refer to a 2016 study where it projected that neobanks in the region would grow at a CAGR of 10 to 11%, and that was between 2016 and 2026. So that's a good 10-year period. However, statistics just before the pandemic also showed that there were only about 20 neobanks in the Middle East. Even though we have witnessed a few other neobanks, being launched during and after the pandemic, the number is still below the margin, considering that there are globally more than 400 banks. Plus, MENA region has been known to be a global leader in banking, if you like. So I guess this does, it piques the question, why so few standalone in this region? And I think me and you discussed this in a previous session when we talked about, regulatory and RegTech. And, regulation raising the bar for neobank entrance does exist. If we go back into the financial crisis in 2008, exposing significant failure in the way banks and financial institutions are regulated. And of course, since then, this has been a major contributor to how financial institutions have been evolved. And now, in the age of open banking, for example, and increased threat from a cyber attack perspective, regulators cannot help but instill more stringent regulatory measures to combat possibilities of a repeat tragedy. So regulation spans from a KYC, online security, customer data privacy, open banking, need to protect the mobile channel, and so on and so forth. Also, big banks outstripping startup neobanks. That's another way to look at it. A considerable percentage of neobank, not only in the MENA region, but also globally, are owned by traditional banks. This primarily because they have more resources they can throw into their neobanking initiatives, of course, compared to fresh startups. And this continues to raise the competition in the neobanking space. Breaking down the differentiators. Neobanking is still nascent in the MENA region. Startups looking to venture into that space basically need to have well-defined strategies in place to ensure uniqueness and maintain competitive edge from ground up. However, identifying the differentiator, proposition remains a huge challenge as more startups continue to roll in. And finally, I would tackle one more point in that arena, which is changing the people's mindset. And, whenever we go into an account and we discuss neobanking propositions, we start with the mindset. In addition to having unique propositions, of course, most people, especially baby boomers and Gen X's, have the mindset that physical branches are more secure and, their finances are safe. That's an important angle to look at as well. But if you compare that to the millennials and the Gen Zs who love new digital stuff and they live on social media platforms, they don't want to, visit a branch, and, they never had that experience to start with. So their preference is from their own experience.
Well, let me turn to Pankul. The first question I want to put to you, Pankul, do you agree that regulatory conservatism, with a small c, is what's holding back neobanking in the Middle East?
So I may not agree to all the statements what Tamer made. My view is different. See, globally, there are around 350 to 400 banks. I agree to that argument, what Tamer stated. But if you look at MENA region, there are roughly 30 to 40 neobanks which has come up. So this is the statistics as per the last 6 months. And consider the fact that as well, that this economy, especially on the UAE, is a overbanked economy. So we already had a population who was covered with banking. And did they really need neobanks? Maybe the answer is no. And that's why the regulator was not so aggressive in granting all the neobank licenses, considering there was a risk as well, where a lot of KYC factors, digital onboarding were at risk initially. If you look at the regulatory angle, yeah, so this market, this government has accepted the fact that neobank is the future, but is it an immediate need? Maybe it was no, because this population already had zero unbanked population. So that's what I would put it as an argument.
I have to agree with you, Pankul, there. When you take the UAE as an example, yeah, I mean, the majority of the population, whether they're locals or expats, are definitely banked and they're tech savvy. And, that segment of population is very specific to that market. So, yes, I do agree with that point you've raised.
Are you saying, though, Tamer, that that's not true of other countries in the Middle East?
Other countries, there's a large unbanked population that needs to be banked, and there's other factors to be taken in place, such as internet penetration, such as education. These factors play a big role in the underserved, I would say. And each proposition you go into with neobanking is not off the shelf. You work with financial institutions to serve a certain purpose. So we've done neobanks in the Levant area. So we have more than 40 million unbanked. So when the bank looked at what value proposition they want to put in place, we've worked specifically on that angle. And it makes it harder when you go to a country or a place where it's overbanked, or there's a big line of banks serving the people. Then the proposition becomes harder. Being unique becomes even harder in that space.
Well, there is actually a corollary to that. It's not just about being unique in that space. Most of the neobanks that have been established in the Middle East are subsidiaries of existing banking institutions. Is there a risk that those existing banks, by establishing a neobank, yes, I can understand the attractions of trying out the technology, wanting to stake out a claim in certain market sectors and market areas and product sectors and product areas, but is there a risk of simply cannibalizing their customer base?
The risk is always there, but the question lies whether those traditional banks will eventually vanish, for example, or whether these will overthrow the branch-based banking entities. Lies in how fast those traditional banks will evolve, and if they're evolving, then as it stands, traditional banks have more capacity to leverage and maintain, their position in those markets. Robin, this is an evident with neobanks attached to conventional banks in this region. And, I have examples such as Blink, Capital Bank in Jordan, Liv, UAE's first digital bank in Emirates MBD, ELA, ABC Bank, Reflect, and the list goes on. Then you look at resources to expand and satisfy those customers' expectations. The primary reason for traditional banks are launching neobanks is to adapt to the changing customer expectations, especially millennials and Gen Zs, towards digital finance in specific. As we pointed out earlier, traditional banks have more resources across all dimensions: capital, human resources, stable management, and so on and so forth.
But are we saying, let's just take one of the examples you cited, Emirates NBD and Liv, one of the first neobanks to operate in the UAE. Has ENBD been able to grow its overall customer base, or has the establishment of Liv just resulted in a migration of some of those young Gen Z customers, some of those millennial customers over to Liv from Emirates NBD? Have they actually, however, been able to increase their overall customer base?
I'll leave that question to Pankul, but let's not forget, because this is attached to an existing bank, so it's a traditional bank, and that bank already has a large existing customer base. So you'll grasp from the market those, Gen Zs, and you will have, from the same existing base people coming on board into that and being served because they want that convenience and they want that flexibility and time factor.
What's your view on this then, Pankul? Do we have any evidence to suggest that neobanks attached to traditional banks have done anything other than cannibalize the audience, or have they gone out and got more customers?
My view is they have definitely got more customers because there was a customer base which was already existing. Then there was a new, I'll say millennial customers which got attached to the new bank. Some of them purely from experimental basis to experience how the digital bank works. Some of them due to the perks which the bank offered initially. They offered a Fitbit watch to the customers who wanted to be onboarded digitally. Some of them got onboarded because making use of certain discounts what the bank offers on the debit card, what you get out of opening an account for Live. Okay, now if you look at the trend for first few years and the last 1 year, there has been no significant increase in the number of customers on Live side. Initially, it was exponential, but the growth has been stagnant because there is nothing so exciting about which is coming out. Coming back to Robin, your statement, it's getting more of a cannibalizing on the existing customers with an already fully banked market. You need to create something really fancy to keep on increasing number of customers on a day-to-day basis.
We have talked quite a lot about the UAE marketplace. That is a standout case of a market that is saturated with banks. What does it take for a neobank to be a success? There's two different markets, or two different kinds of markets. There's the saturated market in the UAE. What makes neobanks stand out in a saturated market? Tamer, to you first.
Well, considering the hub of banking, in the world, the Middle East is oftentimes said to be overbanked in general. For instance, has close to 50 retail banks that's in the UAE, serving 10 million population, which translates to about 200K people per bank. And on the other hand, in the US, has about 4,700 retail banks, serving about 330 million people. So translating to about 70K of people per bank. The gap is evident, and this simply tells us that there is still room for development. However, incumbents continue to face stiff competition from fintechs, and you cannot not take that into consideration. To fairly tap into the current market, whether it's in the UAE or other countries around in this region, and retain the market share, banks need to go where customers are. In digital, there's room for traditional banks that can offer and innovate products and serve today's customer needs. In a nutshell, there's no risk for traditional banks, cannibalizing their customer base that is offering the same products with a digital mobile-first approach. In fact, this would help them have a greater competitive edge, where there is need for incumbents to leverage financial technology now more than ever, not to remain subpar banks operating with 1990s process technology or culture or mindset.
There's one thing you said there that I'm going to pick on. You said banks need to go where the customers are. Arguably, I would also say they need to go where the customers aren't, because the one thing that the digital technology does allow is much easier access for purposes of financial inclusion to expand that customer base to people who are currently unbanked. And again, if we look around the Middle East and we look around North Africa, there are a lot of unbanked people there that are potentially reachable with a digital banking solution.
That is correct, and it's arguable at the same time. But going where the people are, as you said, that angle is very important. The unbanked people and the value proposition, how you can hook that market. So again, we go back to the same question. If I'm in a country like the UAE, is different than a country like Iraq. In Iraq, for example, they're skipping years of technology and processes and processes and going from traditional banking to neobanking. So there's a gap in the middle that they had to over jump.
Let me just have a final thought from you, Pankul. What is it that is going to make a neobank stand out in the marketplace? What's the, if I can put it this way, killer app? What do they need to get right to succeed?
Robin, I would state it on a P-square basis. It's about purpose and profitability. Okay. Purpose is whether I'm going to address the unbanked population, or am I going to launch something unique into the market? So that's the clarity what needs from day one. I have seen a lot of neobanks getting closed within 1 year of launching. And that's the fact, because we just for launching for the sake of launching does not work. There should be a clear purpose. What am I going to do with this? And especially in the MENA region, we know there are unbanked market, whether it's, let's say, Morocco, whether it's, let's say, Egypt, where we know there is a population somewhere between 30 to 70% of the population, which is still unbanked. That's a clarity of thought required. That's the first thing. Second thing is plan for profitability. So in the long term, you will have to definitely look at how are you going to generate the revenue out of it. Initially, you may be burning cash, but maybe 1 year, 2 year, 3 year, 4 year, or whatever number of years down the line, there should be some model around how the cash is going to come out. So I would emphasize on these 2 points. One is the purpose, second is on the profitability.
And a final thought from you on this, Tamer.
It's a really good question, especially when you mentioned the killer app, Robin. See, customized UX, that's important. Neobanks are focusing on single screen transfer to make customer experiences more intuitive and seamless with a no click to a few clicks, right? Mobile journeys in general. In a busy world where customers want banking solutions to help them do what they want to do conveniently while saving time. So, it's not just about launching a mobile application through the power of open banking. Neobanks are leveraging on API integrations to support multiple payment channels such as, P2P, A2A, ACH, or other common services in today's payment systems, such as PayPal, for example. Let's look at gamification, right? So this is already a common feature, not only in neobanking, but across most digital platforms today. Users can move icons and other elements around, to customize their own UI-based and needs. They could also, automate receipts and add personalized notes to their receipts for better visualization. Let's look at easy account opening. Gamification could also be extended to account opening, and statistics have shown that cumbersome onboarding process costs banks more than 60% of their customers. So modern day customers want to simplify, and they want simplicity at the core of every digital offering that those banks are giving. Integrating to third-party functionalities, that's key. Enhance security in that space with biometric technology, for example. And of course, finally, probably something like real-time fraud detection. So these things are at the core of having a new bank successful, and how it stands out in a crowded banking market, as we mentioned and discussed earlier when we said UAE, for example. So in a market like the UAE, if you don't have amazing customized UI and you don't embed the gamification and integrate into third-party functionalities, people will see that they're all the same, and they won't pick up on a bigger customer base.
Thank you very much, Tamer Al Mauge, Managing Director MENA for Codebase Technologies, and Pankul Verma, Principal, Cedar Management Consulting International.